very excited about the event today. 2 months before the end of the Civil War, Senator Charles Sumner, the leader of the Senate's anti-slavery faction, championed the bill to create Freedman's Savings Bank. The objective of the bank was clear: a savings bank institution created for former slaves and their descendants. As Frederick Douglass, who later led the bank, said, "The mission of Freedman's Bank is to show our people the road to share of wealth and well-being of the world." President Lincoln signed the bank into law just a few weeks before his death. The bank grew quickly, opening 38 branches across 16 states. Yet all of us here know well the legacy of Freedman's Bank is one of tragedy. Overwhelmed by the panic of 1873, combined with mismanagement, a general loss of trust in the institution, and a systemic failure to invest in formerly enslaved and free Black communities, the bank closed. Tens of thousands of newly freed Americans lost their savings, creating an economic nightmare for those who had entrusted the Freedman's Bank with their hard-earned savings. We're still very much living with the negative reverberations of not meeting the aspirations of Senator Sumner. And we are still living with the centuries-long failure to create an economy that works for Black families and other people of color. I think it's possible to draw a straight line from the failure of Freedman's Bank to racist redlining practices to the fact that the median white family has $184,000 in wealth compared to $23,000 for the median Black family. We're all here because we know opportunity is not equally available in our nation. Black, Latino, Asian, and Pacific Islanders, tribal nations, and members of rural communities have all seen limits on their ability to move up the economic ladder. The Freedman's Bank Forum is an annual event acknowledging this difficult truth, as well as showcasing solutions aimed at creating an economy where everyone can reach their full potential. At Treasury, we've been guided by a fundamentally American notion of ensuring equal opportunity for all, regardless of race and place. Secretary Yellen, Deputy Secretary Adeyemo, and other members of our department will discuss in great detail the full scope of our efforts. Others from the Biden-Harris administration will also highlight the work we're doing to place equity at the center. And as so many of you know in this room, private and philanthropic sectors are seizing opportunities created by the Biden-Harris administration to build wealth among communities of color. We need everyone involved in this important push, so let me just say thank you very much for your efforts. A deep gratitude. We're enormously appreciative. And now I'd like to invite Secretary Yellen, Chair Rouse, and Jonathan Capehart to the stage. Thank you.
Please welcome journalist and TV commentator Jonathan Capehart, Chair of the White House Council of Economic Advisors Cecilia Rouse, and the Secretary of the U.S. Department of the Treasury, Janet Yellen.
In the room and everyone who's watching virtually, Secretary Yellen, Chair Rouse, thank you for hosting this event and for this fireside chat. Before we dive in, Madam Secretary, since we are in your house, would you like to say a few opening words?
Thank you so much, Jonathan. Let me begin by welcoming everybody to Treasury today, to the Freedman's Bank Forum. I'll just start with a couple of words about why we're gathered here. And the reason is to carry forward the aspirations of the Freedman Savings Bank. Now, I'm sure other people are going to go over the full history of the bank, but in short, the bank was originally established by President Lincoln to help newly emancipated people build wealth. Yet, insufficient resources and management support led to the bank's failure that caused more than 60,000 Black Americans to lose their savings. And I think the failure of the Freedmen's Bank is illustrative of the difficult truth surrounding race in our nation's history, from Reconstruction to Jim Crow to the inequities that really continue to persist today. Our economy has failed to live up to the nation's promise of equal opportunity for all. We know that we need to do all we can to build a fairer economy, and that's why we have put racial equity at the forefront of our agenda at Treasury and across the Biden administration. We did this first with the implementation of the American Rescue Plan that was tried to build the foundation for an equitable economic recovery. And now through our recently passed economic agenda that includes the Inflation Reduction Act, the CHIPS and Science Act, and the bipartisan infrastructure law, we're trying to invest in communities that have often been ignored or overlooked. Our economic blueprint supports our strong belief that tapping the potential of all communities is something, it's not just the morally right thing to do, it's also a promising strategy for inclusive economic growth as well. So today, you'll be hearing from leaders across the administration, state and local governments, philanthropy, and the private sector about what each of us can do to support the economic development of our underserved communities. And we'll also be sharing some exciting announcements as well. So let's get started, and it's my pleasure to chat with Cece Rouse and Jonathan Capehart. And Jonathan, please, it's yours to take it away.
Well, thank you, Madam Secretary. We've got 25 minutes, and I have a lot of questions to try to cram in that time. Last year, the focus of the forum was on recovery in the middle of the pandemic, and the administration's focus on equity in administering relief. My question is, what are you seeing 1 year later in terms of recovery for communities of color?
Great. Well, thank you very much. Why don't I start? Largely because at the Council of Economic Advisors, we've been very focused on understanding how the recovery is going, how it's affected different populations. And just in September, and I only date that because we get new data on Friday, which will tell us even more up-to-date information about the progress. But we actually wrote and did an analysis about the economic recovery for Blacks in particular. We've looked at Hispanics as well. But let me focus on Black Americans for the moment. So if we go back to the beginning of the pandemic-induced recession, April 2020, we know that the unemployment rate for Black Americans peaked at 14.7%. And employment dropped tremendously. If we fast forward to where we are roughly today, so looking at the most recent data, we can see that Black employment has recovered almost entirely. Labor force participation has recovered. The unemployment rate for African Americans has dropped tremendously. In fact, the recovery for Black Americans has been faster and stronger during this recovery than during the last 3 recessions. In addition, if we look at wage gains for Black Americans, we can see that at the median, There's been an increase of about 7.8%. If you calculate inflation in the same time period, those wage gains were actually faster than inflation, meaning that there have been real wage gains over that time period. And what we could see is that it's largely due to Black Americans moving into higher wage occupations, higher wage industries. So, we are going to get new data on Friday. We will look to see how's that going. But we do know that in terms of the labor force, there has been tremendous recovery. I will note one last bit, though, is we also know through this pandemic that there was a tremendous consequences for our children, and that if we look at the learning loss, when education went online during the pandemic, that the gaps in educational attainment between Black children, Hispanic children, and white children widened. And that is a consequence that we need to rectify just as quickly as possible, because not only does it affect children today, but we know in terms of our future that there'll be consequences for their labor productivity, for their own well-being as adults going forward.
So in this building, Treasury was given much of the responsibility for actually implementing many of the programs that were in the American Rescue Plan. And from day one, our focus was on equity to make sure that low-income communities and individuals received a substantial amount of benefits. And I can give you some examples of how we did that and what the outcomes have been. So, for example, one of the programs that we administered here at Treasury was the Emergency Rental Assistance Program. And it had started up before we got here, but when we looked at the rules that had been written for how individuals could qualify to receive assistance under that program, we realized they were just incredibly restrictive. An individual or a family that's about to lose the roof over their heads, if you ask them to produce a year's worth of W-2s, a rental contract, and canceled checks to show they had paid rent, many of the families would miss out on getting any assistance at all. So we tried right from the outset to make sure that we readjusted those rules so that families in need would be eligible. We increased the flexibility in accessing these funds. And the outcome is that 80% of the emergency rental assistance funds reached very low-income households. 40% went to Black households, 20% to Hispanic households, and the largest reductions we saw in evictions were in communities of color. Another challenging but very important program we were asked to administer was the child tax credit. And it had been expanded substantially in the rescue plan, and Congress thought it was very important not to deliver this simply by having households file an income tax return and more than a year later getting a refund check in the mail, but by having checks that would go out every single month. And we were given, or the Internal Revenue Service was given 3 months to get this going. They had never done anything like this at all. And to their credit, and our working with them, they managed to get this program up and running, and tens of millions of families received very substantial funding that it's estimated reduced the child poverty rate by almost 30%, and very substantially by a third the number of adults who were living with children in households that had food insufficiency. And I guess the last example I'd give you is that Treasury has been administering the state and local fiscal relief funds, which is a gigantic $350 billion program providing funds to states, cities, counties, and tribal governments that is mainly intended to provide aid to individuals and communities most impacted by the pandemic. And I've been traveling around the country, and as I visit different cities, looking at ways in which the funds have been used and are making a difference. And it's really stunning and heartening to see the commitment of so many state and local governments to using these funds to help low-income communities. I've seen programs that improve health care, nutrition, are providing workforce development, many that are promoting small businesses in low-income communities, affordable housing, and providing broadband access in low-income communities. So I think our focus, Jonathan, has been making sure that the substantial funds to address the pandemic and its impact on low-income communities has made a real difference.
Well, let's talk about the racial wealth gap, because that's also one of the focuses of the administration. And wealth accumulation continues to be a big barrier to opportunity for communities of color. This is a two-part question. First part is what needs to happen to bridge this gap, which is sort of a layup question. But one way we have seen African Americans try to close that wealth gap is through investing in cryptocurrency. And there's a study this summer from Ariel Investments and Charles Schwab that shows that African Americans are more likely to invest in cryptocurrency than whites for lots of obvious reasons, one of them being access to capital and banking. But it's highly unregulated, as you both know. The Financial Stability Oversight Council, which you chair, Madam Secretary, released a report yesterday that warns of the risks cryptocurrency poses to the larger financial system. So the question here is, what needs to be instituted to protect Black Americans from bearing the brunt of downturns or collapses of cryptocurrencies as happened this year?
Well, thanks, Jonathan. Actually, President Biden asked his administration to produce a whole series of reports on the risks, and I should say also the opportunities associated with digital assets. And the report that you mentioned was one we released yesterday, the Financial Stability Oversight Council, that looks at financial stability risks and gaps in regulation. And we've also issued other reports that look at issues pertaining to consumer investor protection. And really, this is an area where regulation is in many ways inadequate, and we spelled out some of the ways yesterday and also in other reports. And, you know, this is a domain where we have seen enormous volatility, and just over the last year, we've seen the collapse of a number of different crypto assets. We have seen individuals, and as you point out, disproportionately individuals of color who invest in these assets who've lost their entire life savings because they haven't understood the risks inherent in, for example, banking in something that is a crypto asset that promises a high return but isn't protected by FDIC insurance that applies, keeps individuals safe who do normal banking. So I really think this is an area where we need substantial additional regulation to provide a framework that makes it safe to invest in these assets and provides consumer and investor protection.
Mm-hmm. Chair Rouse?
Sure. Absolutely. We all understand that crypto is, our regulatory frameworks were not developed in the area of digital assets, and we need to bring them up to date. But going back to your layup, so if we want to go back to the fundamentals, I see Secretary Fudge has a chair reserved for her. We know that housing is often the largest asset that most people own. And we also know that because of a legacy of discrimination and redlining for many African Americans and communities of color, being able to make that kind of investment has not been possible. It's why it's been a focus of the administration to address some of those discriminatory practices involving redlining, and to ensure that we have adequate supply of housing. This has been part of the president's economic focus from the very beginning. It's more in part, but this goes back to redlining histories of discrimination, but we also know that housing supply since the Great Recession has been in very short supply, aggravated by the pandemic where the demand for housing really increased. So the administration has been putting together both legislative proposals, but also working administratively to try to increase access to affordable housing, especially single-family housing and multifamily housing. It's involved zoning, working with local communities and ensuring that the zoning is accommodating to these kinds of purchases. I will also point that the administration is also focused on what I call human capital as a labor economist. So that is also an important way for people to build wealth. So that's access to quality pre-K from the very beginning, high quality pre-K and childcare. There are numerous studies which demonstrate that when children have access to that kind of high quality pre-K, which involves well-qualified teachers, small class sizes, that goes on to pay for itself many times over. It's a long play. It takes time for those little kids to grow up and become productive adults, but we do know that that kind of investment means that those children go on to have better adult outcomes, which means that they get better jobs, have higher earnings, and can start accumulating. They also can then invest in their children. We know that that doesn't just stop at pre-K. We have to have high quality elementary schools and importantly, higher education as well. And so this administration is focused on all aspects of the educational system in order to improve human capital in that dimension. But health is also part of human capital. And so having access to affordable health insurance so that you can have access to affordable health care is so important. So the expansions to the ACA that were afforded under the American Rescue Plan and that have been extended in the Inflation Reduction Act will benefit about 500,000 Black Americans so that they can get the health care that they need, because if you're sick, if you're not feeling well, you cannot be a very good parent or a member of your community or go to work. So we know that those are important ways in which we build wealth as well.
Go ahead. Yeah, yes, I see you're trying to jump in. Go ahead.
Well, just one thing I want to add. Last year at this forum, the Vice President announced that Treasury would be sending nearly $9 billion in funding to community financial institutions and minority depository institutions under a program that was part of the ARP called the ESIP program, Emergency Capital Investment Program. And so in addition to all the things that Cece mentioned, we're focusing on access to capital that small businesses, minority-owned businesses, often in low-income neighborhoods, lack the access to capital that they need to be successful, to hire people, to grow their businesses. And this is a remarkable, the biggest ever investment that we've seen, capital being provided to these institutions. And we've now delivered these $9 billion of funds to over 162 institutions across the country, which is going to channel financial investment into communities where there's been underinvestment. Also, I'd say that we realize that to invest these funds successfully and to make sure that they have a significant impact in changing the reality on the ground, we realize that we need a wide set of perspectives. So I'm really excited today to announce that after months of planning, we're officially unveiling a new 25-member advisory committee on racial equity that will be starting up. And we've been working very productively with our Economic Opportunity Coalition. I want to thank all those involved in that. We had breakfast here this morning, a group of 20-plus foundations and companies that are working with us to make sure that this financial capital really has an important effect in changing the reality on the ground for low-income communities.
Okay, we've got 7 minutes, and I've got 10 questions, and so I am determined to get through them real quickly. Today's event brings together the private sector and the administration. It's a two-part question. One, how do you see the two working together to address inequities? That's the layup. But here is the tough question. There are worries of a looming recession. So how can you keep the private sector engaged in these partnerships when the ideal of these engagements conflicts with their bottom line?
You want me to start off, or you want to? Well, I mean, as I just mentioned, we're really fortunate that we have an Economic Opportunity Coalition that's agreed to work constructively in public-private partnerships to think through very carefully how the funds that are being made available can really promote greater success in low-income communities. And they can help businesses have the technical expertise that they need to use these funds productively. They can work with businesses that will be recipients of funds to make sure that they have not just capital, but also customers, which they need to succeed. They can help in training the people who will work and benefit from these funds and be able to qualify for good jobs. So we're excited by the public-private partnership aspect of that. We think it's necessary for this program to be successful. And, you know, we hope we will not see a downturn in the economy. We've got a strong labor market, and as Cece was saying, that's really made a very positive difference. But I believe that these partnerships will survive, and of course, when you have a strong job market, it's easier, and we will do our best to make sure that remains the case.
Mm-hmm. Chair Rouse?
Yeah, I just wanted to sort of challenge the premise of the question a little bit, in the sense that there are many aspects to the Biden economic policy framework, but at its core is that there is a really useful partnership between the public sector and the private sector, and that we need to work hand in glove together to, there are many things that the private sector does very well. We are a market-based economy, but it doesn't do all things, and it needs the public sector to help in some ways. But one of the areas that the president has really put an emphasis on is increasing competition. And it's increasing competition not only benefits consumers, but it actually benefits all of society, including employers. Sometimes employers are just doing things the same way because it's just the way it's been done, but they don't understand that they are not tapping all of the talent in their neighborhoods and their communities. And one of the benefits of this very tight labor market is that they're drawing in unusual workers. And I have full faith and confidence that they will see that these workers are very talented and very productive, so that I'm not convinced we're going to see exactly the same patterns that we've seen coming out of other recessions, or if there is a cooling, that it's going to have that kind of impact on communities of color first. So I believe that we all benefit when everybody's on board, and I think the private sector will see that as well.
Let me get you on climate in the little bit of time that we have. Extreme weather events are becoming increasingly frequent and costly, with communities of color and low-income communities often facing disproportionate impact. A compelling report by Margot Snipe of Capital B News points to concern among residents of a Black area of Fort Myers, Florida, that they will be last in receiving assistance, if they receive it at all. She quotes Stephanie Stevens as saying of public officials, quote, "They ain't coming for us. This is a good old boy town." I bring that up because, broadly speaking, how is the administration approaching such disproportionate impact and the inequities in recovery?
This is a work in progress, but I think even the fact that the president and first lady when they went to Puerto Rico yesterday, they didn't go to San Juan. They went to a southern part of the island, which is not traditionally visited, and which was harder hit by the hurricane. What I would say in response is that this administration pays attention, and oftentimes problems can be solved simply by shining a light on it. And so when this administration has been very intentional in how it's trying to deploy when it comes to the various legislation, the bipartisan infrastructure law, the Inflation Reduction Act, as we think about where those investments go, we're trying to be very intentional about where those investments are made. And so with the recovery, it's still in process, so I can't speak to literally how it will be done, but I can tell you in every meeting that I have been at about implementation or trying to respond, there is a lot of concern about those communities that have traditionally not been paid attention to, because we know that we don't make progress until we all make progress. And this administration is really dedicated to ensuring that we all go through this together.
Madam Secretary?
Well, I would second what Cece said and simply say, well, I can't, I don't know exactly how this is going to play out in the recent hurricane, but this administration has been utterly intentional from the outset in all the legislation that's been passed, the Bipartisan Infrastructure Act, CHIPS, the IRA. If you look at the details, there is intense focus on the needs of low-income communities. And I'll just give you one example, which is that one aspect of the Bipartisan Infrastructure Plan promises lead-free pipes throughout the country. And the place that makes the greatest difference is in low-income communities where it's children of color that are have been most severely affected by lead in water supply. And that's just one example of where there's conscious attention to focusing investments where they will address racial inequity.
We've got 1 minute left, so I'm going to try to use this opportunity to squeeze out some news. Madam Secretary, any reaction to your counterpart in Great Britain and their tax-cutting proposal that was offered and then rescinded?
No comment.
Okay. There are reports out there that OPEC Plus is considering cutting production of oil, which I would think would lead to some concerns about soaring gas prices and also the impact on inflation. How worried are you about that?
No comment.
And there are also reports. Okay. There are also reports that you might leave as Treasury Secretary at some point in the near future. Any truth to that?
There is no truth to that.
Okay. And with that, I want to thank Treasury Secretary Janet Yellen, Chair Rouse. Thank you both very much for this fun conversation.
Please welcome Blue Meridian Partners Chief Investment and Impact Officer, Jim Shelton, White House American Rescue Plan Implementation Chief Data and Equity Officer, Clarence Wardell, Mayor of San Antonio, Texas, Ron Nierenberg, CEO and Executive Director of the National League of Cities, Clarence Anthony, and the Roosevelt Institute's Southern Economic Advancement Project Executive Director, Sarah Beth Gell.
It's great to be here with all of you, and I'm excited to introduce our next panel, Equity by Design, exploring how cities and counties are advancing racial equity through the American Rescue Plan. For the last year and a half, I've had the privilege of serving as the Chief Data and Equity Officer on the White House American Rescue Plan implementation team, working with our coordinator, Gene Sperling, to ensure that we are meeting the President's goal of advancing equity through this once-in-a-generation investment of funding in communities, businesses, and families. Like Treasury, our #1 priority is ensuring that the American Rescue Plan leads to an equitable economic recovery for all Americans. This summer, we released this report that details how the administration has centered equity in our economic recovery efforts. The report also included the release of our ARP Equity Learning Agenda and an announcement of over $10 million in funding for evaluations to learn from the innovations that are happening across the country, not just at federal agencies, but in states, cities, and counties across the country. As a complement, Treasury released an Equity and Outcomes Resource Guide that lays out specific best practices that can be adopted by governments. Today, we have a great panel of leaders that will bring many of the equity-focused strategies in the White House report and the Treasury Guide to life. In addition to lifting up successful examples of equity-focused implementation, we hope that this panel will serve as a call for action to encourage even more support for governments to implement best practices like equity budget processes, evidence-based interventions to increase access to resources, and models for community engagement. That is why the White House and Treasury are calling on cross-sector leaders like those in this room today to work together to create more communities of practice, resource guides, and other tools that will support governments in using best practices in their implementation of recovery funds. With that, I'd like to introduce your moderator, a friend, and a true leader in achieving equitable outcomes through community investment, Jim Shelton, Chief Impact Officer at the Philanthropy Blue Meridian Partners. Thank you, Jim. Thank you all.
Thanks, Clarence. Good morning, everybody. Oh, excellent. I spent most of my time in education, so it's really important that we get the call and response going. I want to first make sure you actually know our esteemed panel. Mayor Roy Nierenberg, the Mayor of San Antonio, Sarah Beth Gell from the Southern we just talked about it, and I promised I was going to get it right. The Southern Economic Advancement Project, and of course, Clarence Anthony from National League of Cities. Today is an important day because, as you've heard already, the focus of the day is how we actually use, well, talking about ARP, but really is public funds to improve equity in this country. What we know is that before the COVID crisis, before the most recent economic downturn, there was significant inequity in the country. When you looked at the Raj-Chetty data, it made clear that economic mobility in this country has declined from, if you were born in the 1940s, you had a better than 90% chance of doing better than your parents. If you were born in 1985, your chances had already dropped to just 50-50. So before any of these crises that have faced us, we knew that we were in a perilous space as a country. And then when you tied that to communities, you could see the inequity, whether you looked at the map at the national level, where the South pops out as the area in most distress in terms of mobility, and within every community, in every city, you could see the disparities by population and geography. So the question is, if these problems existed before, and now we have the unprecedented both crisis and challenge created by COVID, and the opportunity created by this influx of federal resources, what exactly can we do to leverage these funds that have been historically designed to address equity in our communities? With that, I want to actually bring it to you, Mr. Mayor, first, because you in 2017 started this work with equity in mind. So I'd love for you to lay the foundation for why you did that in the first place, and then how these funds have helped you to pursue your agenda in San Antonio.
Thank you, Jim. It's It's an honor to be here in the panel today to talk about this issue because it is part of San Antonio's story. San Antonio is the 7th largest city in the United States. We're also the largest Latino majority city in the country. We face challenges that are not unlike many other major American cities. So in 2017, recognizing the legacy of redlining, recognizing generational poverty, recognizing that so many of our disadvantaged members of our community live in census tracts where you also see dilapidated housing, you see underinvestment in infrastructure, we decided to change that. And so we took on the entire budget. We developed a budget equity tool really looking at our infrastructure dollars and how we can more equitably resource those areas to start bringing them up to par using those measures of race and income to really look at how well we were investing. That over the last 5 years, I'm happy to say, we have continued to use that budget equity tool. We have trained our city departments on equity competencies. We've also developed an equity atlas that allows us to use GIS mapping, et cetera, to really develop how we are looking at issues of equity and what differences we're making. So from the very start in 2017, pre-pandemic, noting that these inequities were deep-seated, we decided to tackle them from a systems perspective. So now that we have the entire country thinking about how issues of inequity have been exacerbated by the pandemic, and we have federal partners that are wanting to do something about it, we were able to use this tool as a foundation of our approach and start to plus up those interventions at the local level.
So one of the things that I know is that in building on the work that you've done, you've had access to these public resources, but you've also looked to community as well as leverage philanthropic resources. So can you just talk for another second about why that's important given your ability in this moment to be able to move very quickly with just the folks around you inside your organization, inside the city government?
Sure, well,
in particular why philanthropy might be helpful at this time when so much money seems to be around.
Absolutely. Well, a couple of things. I believe strongly that equity begins with having a voice, having a seat at the table. So it was really important for us to hear from community what the challenges were. And I'll give you an example. As we were working towards the emergency housing assistance that was greatly expanded by the state and local interventions, we were able to find out exactly what Secretary Yellen was saying about it's very difficult for someone to even approach the process of applying for those funds. So hearing directly from community at the beginning, as you're creating the programs, allows us to address the needs. And we are seeing those now as we measure the success of the program. We are actually intentionally focusing on those areas that are most disadvantaged, the qualified census tracts, and we're seeing the results now in the subscription to those assistance programs. We're reaching the people that we are intentionally trying to focus on.
Fantastic. And I'll come back to you a little bit later about that question of there are the things where funds are already available and it really is a question of access, and then there are things about where really you're making new resources available. So let's do that. But first, let me come to you, Sarah Beth. You're in the business with SEAT of actually helping to build tools and resources and guides that are actually helping with the implementation of these equitable practices across the South in particular, but frankly, they're a benefit nationally. Can you talk a little bit about what you're seeing in particular that you think communities are doing well, but also what are people consistently missing even despite the good guidance that you're trying to give?
Thanks so much for having me here. Sarah Beth Gale, Southern Economic Advancement Project. We work across 12 southeastern states really looking at economic security, climate, and health. And at the beginning of the pandemic, a lot of our partners, advocate partners, came to us and said, we really want to call for an equitable recovery. How can we come together in the advocacy community and really help our local leaders see what the community needs are, spread good ideas around the region, and see what's happening outside of the region to bring good ideas into the South. And so we started a South Strong Coalition to really harness data and knowledge sharing around the recovery and build out a toolkit that brings these best practices across different local governments and helps spread them. Does surveying, particularly of food insecure households, to say how would you like ARP dollars prioritized in your community, and then tracks about 175 cities, what their spending decisions are, but also if we can see evidence of equitable practices within their spending decisions and community engagement. And so what we're seeing is an amazing uptake of community engagement and equity practices across every size of local government, rural, urban, but also a window of opportunity still exists. So across the 175 cities that we track, about a third really have visible equity practices, which is, they're putting the money into qualified census tracts, for example, or they set some sort of publicly stated equity goals. And about a quarter have really robust community engagement. And so that's a lot more than, your regular budgeting processes before the pandemic, and so we're excited about that. But it shows that there's still some room to go to scale this across the country. And so we believe that there's a couple of approaches that need to be taken to reach that scale, and one is really sub-state engagement, network building, and relationship buildings, particularly among smaller governments. So really crafting toolkits, crafting messages and webinars that reach small town mayors, for example, and link them up with other small town mayors who have taken on equity and engagement practices. And we believe that really the design and structure of federal reporting requirements is the most effective way to spread this and bring it to scale. So we've been really excited about the foundation that the American Rescue Plan has set for equity and engagement as principles, and believe that we can really build on that in future federal fund flows to make sure that it really is reaching every community.
Now, before we move on, you are focused in the South. The political context is different, as many people know. Can you just spend a second on talking about this equity work, bringing together mayors of small towns? How is that actually working? Does it actually work? And what are the unique challenges of it?
I think that it's been really nice to see that some of these equity practices really are reaching across partisan divides. I'll take Noonan, Georgia, and Durham, North Carolina as examples that both had really robust equity scorecards when they were implementing American Rescue Plan programs. So rubrics that talked about, is this going into a qualified census tract? Were disproportionately impacted individuals brought into the process to develop this project proposal, and who are the stakeholders that are going to help implement this? And Noonan and Durham are very different places politically. They're about the same size though. And so I think that it really shows that when you put the kind of tools out there and encouragement from the Treasury, or even incentive in federal funding programs, that you can get past some of those partisan divides and really bring equity into implementation across communities.
Fantastic. So Clarence, the National League of Cities has been bringing the people together around issues of importance to cities for a very long time. You've launched this specific set of things focused on an equitable economic recovery. Can you talk about raising up to the national level and the community of cities that you brought together? What are some of the practices that you're seeing be shared, and what are some of the challenges you're seeing mayors run into in trying to actually execute, well, cities, I won't say mayors, cities run into as they try and take on these equitable practices?
Yeah, first, I have to give kudos to the Biden-Harris administration. I've been in public policy over 35 years, and this is a historical piece of legislation that has driven the response to a challenge to the local government, the mayors, the council members throughout America. And it's a recognition that if we really want to rebound, renew, reimagine our cities, towns, and villages, it has to be in the hands of the mayors. It is always said, if you want something done and a problem solved, ask a mayor, ask a city to deal with that issue, and it will get solved. What we're seeing is that with this opportunity from the national lens, we are asking mayors and city leaders to look at the data, to look at the gaps, and not talk about that we have a problem just because there is a problem in terms of our mind, but let's look at the data. The data will tell you that there's racial gaps in education, in housing, health care, and we're challenging our member cities and cities all over America to look at that data and design a strategy and a plan to address the issues that are in your community. Now, what challenges are in Washington, D.C. is different than they are in my home country of Florida. I'll tell you about the country story later. It's very different. And so you can't develop the same plan in one community as you would do in San Antonio with Mayor Nierenberg. I think that given the authority to the local government is going to really drive equity. The whole concept of the American Rescue Plan is to be able to provide equity in its planning and implementation. And I commend, again, the administration for that, for putting the confidence in local governments. What we're seeing is that the plans and the implementation are being designed with the community in mind, as Mayor Nierenberg said. And what we're seeing is real focus on job opportunities, real focus on small business, and those small business are business of color, women, and other communities within the local government. I think there's also local leaders are looking at the decision-making, the transparency, using tools to be able to get those decisions out into the community. So as I look at the American Rescue Plan, it is really being developed and used in communities in a way to reimagine their communities. And I hope that we can see other legislation that would be modeled after the American Rescue Plan, in that you get the dollars directly to the local leaders and not to the state, because then you have to manage and get a plan and all those processes. This legislation is the type of model we'd like to see in the future for local leadership.
Really appreciate that. And then each of you has actually talked about how you use processes and systems to focus on drive to equity. You talked about some of the specific program areas that where you can see the inequities play out. Mayor Nierenberg, I'd like to come right back to you with the question of, as you think about the vision of what you're now able to do for San Antonio, given resources that you actually didn't imagine were going to be available before, what do you think are going to be some of the things that are most different about the way the city will be after you leave it, and sustain the work of doing the work of equity in government?
Well, what we're trying to do is build a more resilient community, resilient economy, and that requires resilient people. So our focus has been on what do we need to equip our community with in order to get there. So immediately, straight out, obviously we're working on affordable housing, access to safe, affordable housing. We have a 10-year, $3 billion program that has been enabled through this focus on equity to really look at where we need to facilitate housing, not only in production but also rehabilitation. A huge effort that we're undertaking now is ensuring, and this is directly addressing the issues of generational poverty in our community. How do we ensure that San Antonians, regardless of where they live, have access to training and education required to take the jobs of the future? So we have embarked on a massive generational change, I would say, in workforce development. That program is as a result of an equity-based framework and talking to the community about what we need. Because the program isn't just about training for new jobs. It's about what are the obstacles that present themselves to a family that would otherwise make use of that kind of program. So when you look at the Ready to Work program, which is, in our view, historic, it's also a program that helps with childcare, with housing assistance, with rental assistance, the emergencies that often often present themselves to a head of household that ultimately becomes the barrier that prevents them from gaining that job. And when we focus on this program using the equity framework, we are finding that we are reaching the people that most need that opportunity. We started a pilot program during the pandemic as a result of the stabilization enabled by the state and local recovery dollars. That pilot program, using the equity framework, what we found was that it directly addresses the impacts of this pandemic, knowing that the majority, the biggest impacts were felt on communities of color, particularly women, in this pandemic economy. We found that in San Antonio, 70% of the participants of this program were women of color living at or below the poverty line. It works if you use the data to guide the process.
Just before we move on, one of the things that you also found was a need to focus on youth, and in particular some of the mental health. Do you want to talk just a second about that and why?
Sure, and I didn't answer your question earlier about the role of philanthropy, Jim, but this is critical for us. In order to ensure that we have a generation coming up with the resources and the opportunities, we have been focusing a lot of our recovery dollars on youth interventions, ensuring that youth have the right environment. If there's a challenge in our community, we want to make sure that youth are being presented programs so that they can be successful in school, so they can make use of the opportunities that we're creating through educational access. So we have worked with organizations on a program called Future Ready with the UP partnership to really focus in our dollars for youth services using a community mindset again to find out which programs are needed at the neighborhood level.
Fantastic.
Jim, may I add to that? I think what the mayor is doing is showing a real example of how the dollars are being used to impact the community. What the National League of Cities did is that we created a local government hub, a tracker, to collect all of those best practices and examples. And that database is being shared with local leaders to be able to see what your community is doing, and maybe that applies to my community. And so the mayor is really a good example of how we have been able to pull in all of those examples, put it in a database, and circulate how you, whether you're in a small city or large city, can duplicate what is happening in that community. So Mayor, I appreciate that your city is in the database quite a bit. So keep your team putting their projects in our local government tracker. Thank you, Mayor.
Clarence, where are you going? Are there other cities that are showing up a lot, and are there examples of things that you think you're seeing spread more quickly than some of the others?
I think the focus on small business rebounding has been one of the things that is showing up in our tracker a lot. Because Main Street, as we all know, in March of 2020, we woke up and we were in this setting where downtowns and cities were just closed. And we never imagined that in our country and in the world. And so a lot of the dollars are being used to help small and minority-owned businesses rebound. The second thing is the revenue loss in local governments. The dollars can be used to help bring back employees, frontline responders. And when I say frontline responders, they're providing bonuses and other opportunities. In my mind, as a former mayor, the clerk at the water, at the opening there to get your water bill or pay your water bill, that's the front line to me. I mean, the public works employees, those are the front line. Local government was the only industry that did not close its doors. And we need to recognize that service that they're playing. And so I think that what we're seeing is local leaders are saying, I see this gap. We need to address it using these ARPA dollars. Small business, returning to work, being able to look at creating funds for homelessness has been a big investment that I've seen as well in LA, Baton Rouge, Louisiana, using similar programs as San Antonio.
Really appreciate that. Sarah Beth, I'm going to come back to you. And we've talked a lot about the use of data. I know that in ARP and lots of other things from the administration, the evidence is also turning out to be important. Like when you are going to do the intervention around behavioral health or other issues, how are you seeing evidence play into how people are making choices as well as some of the other things? And are there other practices you would lift up?
Yeah, I think that we're actually seeing that when cities open proposals for projects, that they will include in there, can you provide evidence that this is going to have an impact in the community? And so kind of turning it out to providers to say, you know, here's why this is going to work, and this is how we know it's going to work in the community. There are we're at the kind of middle stage of American Rescue Plan, and so I feel like what's next is that accountability and evaluation piece. I think one of the most exciting things about American Rescue Plan is equity and engagement and evaluation. It's really a new language for budgeting. And so I think we're coming into that evaluation piece where we'll be able to really measure the impacts that are happening in communities. But in terms of equity and measurement, I think one of the most exciting things we saw were cities that really put forward, here's who's applying for funds, and breaking that down by racial groups of applicants, income groups, neighborhoods of applicants. Here's who's getting a grant to provide services, for example. We saw this in Austin, Texas, around childcare as a good example. And so really digging deep into disaggregated data and presenting that to the community to say, you know, these are the proposals we're getting. This is who not only it's going to serve, but here's the childcare business owner, and kind of disaggregating that data as well. And so really digging deep into where these funds are reaching in the community in a new way.
Mr. Mayor, I see you wanting to jump in, and I want to give you the opportunity, as you do, for us to actually answer one last question as the time starts to run out, which is, clearly you're going to build on that, but is there something else that you would like to see replicated much more across city governments and your colleagues that are other mayors? And if so, how will it contribute to this work, again, as I talked about at the beginning, continuing long after you guys are gone?
Well, thank you, Jim. And I wanted to piggyback on that because watching the data to see who's applying will also tell you who's not showing up. And that's actually informed our approach. Obviously, every city is dealing with issues related to the digital divide. We also have incredible trust issues in some of the most disadvantaged areas of our city. So what we found early on is that we had to actually go and knock on doors. We had to use a community health worker approach where we actually going directly to the home to bridge barriers of language access, for instance, but to reach the people who we were trying to get. When you set your focus on intervening in the most disadvantaged communities of your city, the data will tell you if you're doing that or not. And if you're not, then you've got to figure out how to solve it. And so that's what we were able to find. And so going forward now, we're actually using the community health worker approach to do all kinds of city services. It's a new competency that we've developed as a result of the focus on equity and really looking at the data. With respect to what kind of guidance do I think communities, cities need, we have a great coalition of mayors in Texas that I'm privileged to chair, and so we share our needs all the time. And one of the things that I found, San Antonio is advantaged because we started this focus on equity before the pandemic. There is really not a framework that exists yet. I think we're in pursuit of one. There is a framework that exists around notions of equity that could be applicable, customizable for different communities. And there's certainly not, and we're working on this as well, and thank you to, this is also an area where the philanthropic community is very important. The foundations are contributing to creating competencies within the local government how to use data. That's our greatest need, is frameworks related to equity that can be applied across the board to different communities, different sizes, et cetera, as well as utilizing, analyzing data properly.
Fantastic. Sarah Beth, same close out.
Yeah, scalability and ability to replicate across governments. I think it's a real opportunity with the Economic Opportunity Coalition of this cross-sector bringing together of government at all levels, private sector, philanthropy, and nonprofit organizations to really tackle some of these challenges. I would love to see really an intergovernmental commission to say, you know, we piloted all of this in American Rescue Plan funds. What can we learn? What works? What didn't? What new tools do we need? What can the private sector provide in terms of ready-made, off-the-shelf tools that are easily used by local governments? And how can we build that into the next federal funds flow?
Yeah, first of all, Jim, when you used the word mayor, former Mayor Nutter, I almost thought you were talking to him. He was
I'm sure he did.
He was going to come across the ropes. I had to say, no, it's not you. You know, what I see is the big gap is the small city. Cities under 20, 30,000 population, and we're working with those cities at the National League of Cities. You know, San Antonio is going to be fine. They have a grant writer, they have an economic development person, an environmental person, an office of sustainability, have all those things. But there are a lot of small communities that will have challenges and have challenges putting together and responding to the grant opportunities that exist out there in the ARPA legislation, as well as the bipartisan infrastructure law that was passed. And so if we really wanted to have a real impact with these dollars, we have to give the support and infrastructure to those small cities throughout America, which 80% of cities in America are really under about, I'd say, 25,000 population. That's where the real rubber meets the road, if you will, and the real opportunity for us to do the training and the development around equity lens, and real impact that will change America long term, especially for people of color in those rural communities, in those communities throughout America that may not have the real benefit. So we've been working, Sarah knows that, with those regions, especially in the South, in small cities, and now we've expanded globally, working with the Bloomberg Philanthropies Foundation, and we're working with over a couple of thousand cities right now that are small. So I think the opportunity is to get these dollars again back in the hands of local governments so that we can really have real impact in our country.
Deal. I was going to give you the last word, but I have to give it to the sitting mayor.
Do it.
I just wanted to respond to one thing Clarence said, which is that San Antonio will be fine. I hope that is true. But let me say this about equity. It takes a constant laser focus. And the concern, and there should be all across the board as we develop these more universal tools and competencies, is that if the winds of politics changes, if we don't have these systems established, there could be a next set of political leadership that goes in a different direction. The problems of big cities are so massive and intractable and require generational intervention. That's a little bit different, but it requires laser focus. So I want to say thank you to you, Jim, to the panel, privileged to be up here, but also thank you to the Biden-Harris administration and this department for uplifting equity. It has to be there. It has to remain there. As an American public, we have to demand it, and it's going to require us continuing to talk about it and showing success stories.
I couldn't think of a better way to close. Please thank our panel.
Everyone, please remain seated. Our program will continue immediately. Please welcome Secretary of Housing and Urban Development, Marcia Fudge.
Good morning. Thank you very much. Good morning, Madam Vice President, Secretary Yellen. It certainly is my pleasure to join you here today. Your commitment to closing the racial wealth gap is clear, and we are grateful for your leadership. My thanks to Treasury Counselor for Racial Equity, Janet L, and your entire staff for the work that you have done to make this day happen. And of course, it's always a pleasure for me to be with the Deputy Secretary of HUD, Secretary Adrian Todman. It's an honor to serve alongside of all of you in this historic administration. And it is great to be here with all of the distinguished leaders who are sitting in the audience today. I am a student of history. And as a student of history, I know that the Freedman's Bank, the bank records offer a rare and detailed glimpse into the lives of Black families in the period immediately following the Civil War. These records tell a story of a people who were eager to become a part of the American experiment. After generations of enslavement, they were ready to reap the benefits of the promise of freedom. Yet, as we all know, this is a story of promises not kept, a story of an institution that led people to believe they were protected only to betray their trust. People of color in this country know this story all too well. What I love most about history is the lessons it provides. Lessons that as citizens, and especially as leaders, we have a duty to learn and prevent history from repeating itself. It is our duty to turn to the lessons of our past into a syllabus for a future where we can achieve true freedom and true equity. Since day one, members of the Biden-Harris administration have been students of history. We have sought guidance from the past in order to inform our policies and decision-making. That is one of the reasons why I'm so proud to serve in this administration and why I'm so proud of the work we are doing at HUD to make people's lives better. Work we are doing to build an America where we invest in the economic potential of communities that have long been burdened by structural racism and underinvestment. That work begins with expanding access to home ownership and opportunity. As Secretary of HUD, this is one of my main priorities, to help people, especially those from marginalized communities, to invest in themselves and their families. That is why we are expanding access to asset and credit building services for low-income people. Our vision is for low-income families to have their fair chance to build wealth and to buy a home of their own if that is their choice. We also know that student loan debt can be a profound impact on people's ability to qualify for a mortgage. And that is why we have neutralized the debt so that it does not prevent hardworking people who can afford a mortgage from obtaining one through Federal Housing Administration. So, because what we know is that advancing your education should not prevent you from becoming a homeowner. Neither should your status as a renter. Many of our first-time home buyers are renters. If someone can regularly pay their rent, there is a really good chance that they can pay a mortgage. So the Federal Housing Administration now allows a person's positive rental history to factor into its assessment of creditworthiness. And I'm proud of our work to bridge the gap between renting and home ownership to further our economic justice agenda. For too many people, home ownership is merely a dream. At HUD, we are doing everything in our power to connect those who have been historically disadvantaged with more resources and services. We can do even more with the help of all of you in this room. Our nation's banks, community development, financial institutions, and minority depository institutions. When I addressed this forum last year, I told you we were looking into how special purpose credit programs can be used to expand homeownership opportunities. We know how useful these programs have been for lenders looking to extend mortgage credit to borrowers who otherwise may not get the best deal. Borrowers who often include women, people of color, and persons with disabilities. Well, we've made it clear that these programs for real estate loans or credit assistance are not prohibited by the Fair Housing Act. And over the past 2 years, J.P. Morgan, TD Bank, Bank of America, and Legacy Home Loans have each implemented programs to help bring more home ownership opportunities to communities of color. And I applaud that work. And I look forward to seeing what we will do to create even more opportunities. Further, HUD is soliciting specific and actionable feedback on the availability of small balance mortgages. We want to know what barriers prevent you from originating these loans. And we want your recommendations for how we can increase the volume of small mortgage loans in FHA programs. We know that people who live in less expensive or rural areas often find it difficult to get a mortgage for a lower priced home. In fact, today we released a report, assessing the limited supply of small mortgages and how that impacts affordable home ownership. I hope this report and your feedback will help us identify the steps we need to take to make change in the small dollar market. We value and we need your partnership. Our agency and the entire Biden-Harris administration strive to close the racial wealth gap through investments in communities and in people. We cannot do this work without partnership and strategic engagement. But most importantly, we cannot let the failures of our past foretell our future. We must recognize that, as James Baldwin wrote, not everything that is faced can be changed, but nothing can be changed until it is faced. There are some dark chapters in the story of America. There's no question about that. But there are plenty of stories of grit and of grace, of perseverance and power, of people, communities, and government working together to make a difference. The Biden-Harris administration is writing a new chapter in that history, in that story. It is on all of us in this room to ensure that this chapter, that we rise, as Maya Angelou wrote, into a daybreak that's wondrously clear, bringing the gifts of our ancestors gave. Let us fulfill the dream and the hope of the slave and allow this nation to rise to its full potential. Thank you very much.
Thank you for joining us this morning. Freedman's Bank Forum will continue after this brief break.
where this started. And a few of us, including David Clooney, who's back in the room over there, were here when Secretary Lew, on the advice from people like John Hope Bryant, started the Freedmen's Forum as an opportunity for us to remember the legacy of that institution and why it failed. And I think there are lots of ways to think about the failure of that institution, but one of the things that he has led us to do is think through how the public sector, working closely with the private sector and nonprofits, can contribute to these communities that have been marginalized for too long. That has started for us in the Biden administration by making historic commitments, like the $10 billion of commitments that we've executed through the Emergency Capital Investment Program that has gone to community development financial institutions as well as minority depository institutions. It's also come in the form of the $12 billion that have been devoted to the Small Business Credit Initiative that has also been directed in lots of ways towards helping marginalized communities and women-owned businesses to have access to the credit that they need. But we know that despite the historic levels of funding that have come from the federal government, that there's going to be a need for the private sector and nonprofits and local communities and leaders in these communities to step forward as well to make sure that what has been for too long a vicious cycle in many of these communities of underinvestments become a virtuous cycle of investment in these communities that build up the businesses, the housing stock, and the opportunity that is needed to make sure that we meet the talent that exists in these communities where they are. As part of this effort, a group of private philanthropies and companies have come together to form the Economic Opportunity Coalition, a coalition devoted to working alongside the federal government to scale up the investments that we've made that have been historic in these communities to make sure that you're getting that virtuous cycle that I've just spoken about. On stage today, we have two members of that coalition and two beneficiaries of some of the work that's happened between the private sector and the government in terms of the partnership that we formed. And we wanted to have a conversation about both the EOC, the Economic Opportunity Coalition, and some of the work that they have done in the 9 short weeks that they've existed since Vice President Harris announced the creation of this coalition and the public-private partnership that we have together. And what I'm going to do first is go to MasterCard and Bank of America, 2 of the founding members, to talk a little bit about why they're members of the EOC and what the EOC is focused on doing that aligns with their business's values and their objectives. And let me start with Mike Froman, since he's closest to me.
Well, thanks very much, and we're delighted to be here and delighted to be part of this Economic Opportunity Coalition. For us, it's a natural outgrowth of our focus on sustainable, inclusive growth and particularly our commitment to financial inclusion. We're committed to bringing 1 billion individuals, 50 million small and micro businesses, 25 million women-owned businesses into the digital economy, and we've supported a $500 million effort in the United States around bridging the wealth and opportunity gap facing Black communities, and with a big focus on small business there. Now, I have to say, Mr. Secretary, when I worked in government, we talked a lot about public-private partnerships. Most of the time, it meant we wanted the private sector to write a check. And what I'm delighted about this effort is that it's not just about writing a check. It's about bringing the strengths of the public sector, the nonprofit sector, foundations, and the private sector to the table and working together to try and solve these issues. That's why I'm so delighted Commissioner Kim is here from New York City, and we're partnering as part of our overall STRIVE initiative to support 5 million small businesses, particularly underserved communities, run small businesses in the United States.
Thanks, Mike, and I think you're right. One of the things that we are focused on explicitly here at Treasury is, as we think about racial equity, how do we execute? And execution doesn't only involve capital, although we all know capital is important, but it involves what do we do in terms of helping to build capacity. So we're very excited about the work that you're doing there. But I know that money matters, and I know that this is a place where Bank of America has been focused in terms of trying to lead the charge, and I wanted to ask Bank of America why they're involved in the EOC and what their efforts, how those efforts align with their business objectives.
Yeah, sure. Well, first, just thank you for convening this panel and for having us here. So, similar to my colleague, it really aligns with our focus on responsible growth, which is both how we run Bank of America and the framework and mandate that our CEO has laid out for us. And basically, at its core, what it means is we have to deliver for our employees, we have to deliver for our clients, we have to deliver our shareholders, And also, we have to help society address the biggest challenges it faces. And so a great example of that is the commitment we announced a number of years ago around racial equality and economic opportunity. And there's really 4 pillars. We focus on jobs and reskilling. We focus on health equity. We focus on small business. And we focus on affordable housing. The way that manifests itself is within Bank of America, we really focus on representation, attracting, recruiting, retaining diverse talent that reflects the communities that we're a part of and that we serve. Externally, when you think about how that work manifests itself, it is about how can we, under any of those pillars, invest capital, deploy resources that enable us to be able to continue to drive and deliver the kinds of products and services our clients tell us they need, and making sure that we're fully serving the needs of all of our communities.
So as you all know, after the murder of George Floyd, corporate America committed a great deal of capital to addressing racial inequity in our country. By one analysis done by McKinsey, it was up to $200 billion of capital. And one of the goals I think that we have thought through here in the Biden-Harris administration, working closely with partners like the EOC, is how do we make sure that that capital is deployed in ways that are scalable, in order to make sure that the historic investments we've made through the public sector are being matched or exceeded by the private sector. And one of the places where we've been focused, of course, is growing out the ecosystem of CDFIs and MDIs in this country. Bank of America, you've played a role in terms of thinking about how you can help support that effort by raising deposits. It'd be great to hear a little bit more about why you're doing that before we turn over to
Sure. So, I've got to give credit to one of my colleagues, Dan Latendra, who leads us for Bank of America. We've got the largest CDFI portfolio in the country, over $2 billion. And if you think about a number of the investments that we have made, we've got, I think, in 22 CDFIs and MDIs, we've made over $42 million in investments. I'd add onto that we've also made $350 million in investments in over 100 equity funds that focus on supporting minority and women entrepreneurs and minority and women-owned small businesses. Further to that, today we've got $100 million in deposits at CDFIs and MDIs. And this morning we announced that we're going to double the size of those deposits. And so we're going to add another $100 million that we're going to have in low-cost deposits at CDFIs and MDIs. And what that really does is it amplifies the ability for these institutions and these organizations to be able to lend, to be able to deploy capital, to support small business, to support affordable housing, to get credit into our communities.
The reality is that a lot of these lenders, be they MDIs or CDFIs, are the only lenders in the communities where they're doing the work. And a few months ago, I was in Memphis, and I had a chance to sit down with 8 black women who ran small businesses. And to a person, they said that they weren't having problems finding clients, but the challenge they were having was getting access to capital. And for them, the best sources of capital was the local MDI or CDFI. And Nicole, you, of course, represent the National Bankers Association. Would like to hear from you in terms of what ESIP has meant for your members, but also what efforts like the one that Bank of America is engaged in also means in terms of your ability to deploy the capital that you do have.
Well, first, thank you so much for inviting me to be here today. It's such an important topic. On the topic of ESIP, ESIP has really been a game changer. Never before in the history of these minority-owned and operated banks that are carrying on the legacy of Freedman's Bank have they had access to this level of capital. And so by having this level of capital, they're able to grow and do more than they've ever been able to do before. Take, for example, black banks. At its peak, there were 134 black banks. Today, as you well know, there are only 19. And while some of that decline has been due to consolidation and failures, a lot of that has really been due to lack of access to capital. And so ESIP provided them this capital that they needed to reverse this decline in the trend in the number of black banks. Another thing that ESIP allowed them to do was double in size. I have so many member banks that doubled in the last 12 months. And when you layer on investments from Bank of America and others, they've been able to triple or quadruple in size because they have this capital. And what does the capital allow them to do? The capital allows them to do more in their communities. They're able to do more lending. They're able to expand to different markets and serve their community. Because as you well mentioned, oftentimes they are the only community lender. They are the only ones who are helping to drive wealth creation in those communities by providing access to mortgages and small business loans. They're providing the capital that's needed. And on the question of deposits, right, we started talking about capital because capital is a huge part of the equation, but deposits is just as important because for every dollar of capital that they have, they need $8 or $9 of deposits in order to do what they do effectively in the community. And so when you think about the $3 billion that came in from ESIP to MDIs, they need $24 billion of deposits. When you think about the $1 billion that came into black banks through ESIP and the other investment through the private sector and nonprofits, they need $8 billion of deposits. So deposits is just as important. And guess what? Deposits is a game that you and I can all play in. Whether it's as individuals or it's the companies, the organizations that we work for, we can all contribute to that through deposits.
I appreciate that, Noel, and I think just to go back to the question, I know that you talked about Bank of America's commitment, but I know that Bank of America is also leading an effort within the EOC to get others to commit. Can you talk a little bit about how that effort's going and what your plans are over the course of the next few weeks?
Sure. So look, you described it so well. I was talking with someone yesterday about this, and some folks don't understand this relationship between capital and deposits and how that translates into the ability to lend. But the reality is that our 100 million, while that might be a somewhat significant number, it's a drop in the bucket. And so our hope is that also by leading by example, it galvanizes others, and we actually expect that others will join us. They will also add deposits. And our goal is we would love to see that 100 million become over $1 billion by others who are also going to have deposits at MDIs and CDFIs.
Oh. And I know it's the Treasury Department, so large numbers are things we often talk about, but I think $1 billion matters. And I think it's something that we should celebrate, and we know that there's more that needs to be done. As you think about the fact that we're focused on making sure that you have the assets you need, I think another piece of this for us is thinking through other places, Nicole, that you think that the business community can be helpful. And I just wanted to ask you in terms of, as you think about this, deposits is important, but what other places do you see need as well?
Yeah, great question. I think the biggest needs of MDIs, who are really community banks, they need technology, they need talent, they need TA and business opportunities. Those are the things that they need. When it comes to technology, technology drives everything that we do, how we live, how we work, how we play, and even more so, how we bank. And unfortunately, community banks have not had access to technology because it costs so much. But through partnerships with EOC members, they're able to have access to technology that they haven't been able to have access to technology before. Through, for example, a grant from Citi. Citi provided a $10 million grant to NBA so that in turn we could push it out to our member banks to help them digitally modernize, something that is so important. Without technology, they're not going to be able to compete. They're not going to be able to serve their customers who are more and more looking to do their banking business online. They want to be able to open an account on their phone and apply for a loan and get approved for a loan on their phone, but they can't do it. Another thing is around talent. Many of these banks are small banks. They don't have dedicated IT staff in-house to help them vet different fintech solutions and help them figure out how to implement all these technology solutions. But guess what? These coalition partners have tons and tons of technology folks. So through pro bono consulting services, they can help them with the talent needs that they have. So those are two key things. Business opportunities, I would say, is the last one. What are some ways that you're banking that you can now start to bank with MDIs? Are there revenue generating opportunities that exist? Are there ways that maybe you're thinking about? I think about Atlanta Hawks. So last year, Atlanta Hawks was really intentional. They wanted to use a black bank to finance their new training facility. Not one black bank could do it, but together they all came together and did that. And I think that pushes against the myth that, oh, these banks are too small. Well, collaboratively, they can come together and do things that they wouldn't be able to do. So I think those are some ways, tech, talent, and through business opportunities that you can partner with black banks.
I appreciate that, Noel, and I think one thing I wanted to pick up was on technology, and I think that this is a place where MasterCard's been doing a great deal of work in terms of thinking about Strive. Maybe, Mike, it'd be helpful for you to describe what it is and then talk a little bit about how you think it can be useful to communities and small businesses.
Sure. Well, what Strive is really all about is making sure that small businesses can get access to capital, can get digital, and get access to networks and the know-how they need to succeed. And we all know how stretched small businesses are. My father was a small business owner, had about a dozen employees. I mean, it's hard to run a small business, and you don't have time to do all the work that needs to be done to really grow. So you got to make it accessible, and one of the things we're doing with New York City is trying to make a one-stop shop for small businesses there. But just to amplify the previous points, we made a small investment with Community Reinvestment Fund, a CDFI in Minneapolis, just before COVID, and it allowed them to build a technology platform that when COVID hit, allowed them to get $6 billion of loans out quickly to the small businesses who needed to stay alive. And C-Note, which is another one of the companies, fintechs that we've incubated, is one of those organizations that's helping place deposits, like the Bank of America initiative, which we've also done with CDFIs and MDIs, and to facilitate that kind of work. So there's a lot that can be done, even with modest technology investments, that can really leverage and create a systemic effect to get capital, to get digital, and to get that know-how into the hands of small businesses.
And I'd love to hear from the city of New York in terms of what are you doing with regard to making sure that you're connecting with Strive? How is that helping you reach out to small businesses in New York?
Sure, thank you, Deputy Secretary, for that question. I think from day one, Mayor Eric Adams said, we need to have small businesses lead our city's economic recovery. Of all the small businesses in New York City, almost half are immigrant-owned and a large number are BIPOC-owned. And so this was critical as part of our economic recovery plan, not just to focus on the social equity piece, but I think the real centerpiece of a resilient economy is going to center around making sure that the underserved communities get the businesses in their communities to help them recover. And so when we heard about this opportunity with MasterCard and with Next Street, and we thought that we needed to talk a little bit more about how they could help expand and enhance some of our services. When you talk about technology, the mayor said from day one that we were going to build a small business portal that would allow all the businesses to come and do a one-stop portal servicing. And it's been frustrating for a lot of businesses in the past. I'm sure it's not just a New York City problem, but an urban problem when you're engaging with government bureaucracy. When you go to, for example, the Department of Buildings, they identify the business owner or the customer through block and lot, for example, right? It's designated on a physical address. When you go in to the Department of Health, they would identify you in another way. So each time you engage with a different city agency through the technology or in person, you're kind of having to refill out your forms, do it all over again, and they kind of treat you as if they have no information about you, when in fact, behind the scenes, they have a lot of data, a lot of information that can all be incorporated into this one-stop business portal. So as we've been working on building that out, we had this other opportunity that came along to even expand and enhance on the mayor's blueprint portal. So we are excited to be able to work with MasterCard. We've had a long relationship working on a number of projects. And I really do think it's what you said. It's not just about the dollars. It's about on the informational execution side of things. And it's also just not about sharing data per se. It's really helping to interpret the data and analyze the data and all of that expertise that private partners can bring to a city like New York. So not just with MasterCard, it took years, but once you have that kind of relationship, it's easy to work on future initiatives. So we really encourage other corporations to also kind of engage with us now so we can also build more of those kind of relationships.
Well, I feel as if we've just started a conversation, but unfortunately our time is short and I need to wrap things up now for us. But I do want to tell those who are watching and those who are in the audience that I do think that one of the things that's going to be critical to us in terms of advancing this work is a partnership between local, state government, the private sector and nonprofits to advance this work. And the key question we have to keep asking ourselves is, how do we scale? Not just money, but also people and technology to address this challenge, and how do we do it together? So thank you so much for the time, and thanks to all four of you for the work that you're doing in this place.
Everyone, please remain seated. Our program will continue immediately. Everyone, please welcome the United States Secretary of the Treasury, Janet Yellen.
Thank you very much, everyone, for joining us today. Since January of last year, the Biden-Harris administration has made racial equity a centerpiece of our economic agenda. Advancing racial equity is not just a moral priority, it is also vital to our economic success. Led by President Biden and Vice President Harris, our efforts to build a fairer economy began with our economic recovery. We know that communities of color were hit hardest by the pandemic, and reaching and supporting these communities is a core priority in our implementation of the American Rescue Plan. 2.5 years into the pandemic, data indicates that our recovery has been historically equitable, with record drops in the unemployment rate for many communities of color. But it's not enough to help families simply recover. Together, we're also building a stronger and more inclusive post-pandemic economy. Investing in disadvantaged communities has far-reaching effects beyond the communities themselves. It can offer high returns on investment and boost economic growth. The administration's trifecta of legislation enacted over the past year, the Bipartisan Infrastructure Law, CHIPS and Science Act, and Inflation Reduction Act, will create good-paying jobs and growth opportunities for businesses across the United States. These laws will expand economic opportunity for communities of color and other underserved people and places. A major part of our strategy is to ensure that historically underserved communities have the capital they need to seize these new opportunities. And just this month, we announced the Treasury has made over $8 billion of investments from the Emergency Capital Investment Program in more than 160 community financial institutions across the country. Through this program, Treasury is helping to level the playing field for borrowers that face the greatest barriers to access capital. As we implement these measures, our Treasury team has been intentional in ensuring that we reflect the background and experiences of all of America. We have the most diverse leadership team in Treasury's history. We have hired our first counselor for racial equity, and we have recently established a new Office of Tribal and Native Affairs and appointed members to the Treasury Advisory Committee on Racial Equity to help make progress on our key priorities. In these efforts, we have had no greater champion than Vice President Kamala Harris. While she was in the Senate, she helped lead efforts to pass the law that became the Emergency Capital Investment Program. And since the first day of this administration, Vice President Harris has been a true partner in our work to build a more equitable economy and country. She's announced the formation of the Economic Opportunity Coalition, part of an historic effort to align public and private investments to accelerate inclusive economic growth. She's advocated for investments to reduce maternal mortality, which disproportionately affects women of color. She's led efforts to root out racial and ethnic discrimination in the appraisal of home values. And more broadly, she has spearheaded the administration's coordinated approach to racial equity, ensuring that it is the cornerstone of everything we do. So with that, I'm proud to welcome to Treasury the Vice President of the United States, Kamala Harris.
Please have a seat. Good afternoon. And to our incredible Secretary, Janet Yellen, thank you for welcoming us, thank you for hosting us, and thank you for your partnership. I think you all, many of you here have worked with our Secretary, with Janet Yellen over the years, and you know that she is an extraordinary fighter for the working people of America, and she's been an extraordinary partner to me and the President as we work on the issue of ensuring that all people in our nation have the ability and the capacity to realize their dreams, and that access to capital will not be a barrier to those achievements. So thank you, Secretary Yellen, and everyone here. This is a room full of leaders. Thank you all for joining us this afternoon. So I will begin with some history, which I think is familiar with many people in this room, but there are many who are not familiar with the history of Freedman's Bank. So Freedman's Savings Bank was founded by the United States Congress in 1865. It was a bank unlike any other our nation had known. Freedman's Bank was established to serve Black Americans newly freed from slavery, to help them build wealth and to build a better future. At Freedman's, to open a savings account, you just needed 5 cents, which, as I've calculated, is about $1 today. In the years after its founding, tens of thousands of Black families opened an account at Freedman's. They saved up to buy a farm, to build a home, to open a business. Even school children saved their pocket money to deposit it in this institution. And then 9 years later, after the bank first opened its doors, because of an economic downturn and because of the organized assault on the project of Reconstruction, Freedman's Bank was forced to close. Over 60,000 people lost their savings. Now, Freedman's Bank was guided by a vision. The vision of an economy that works for all Americans and includes all Americans. The vision of a nation in which all people have access to the financial resources they need to succeed, to thrive, and to determine their own future. Truly at the heart of that bank was the concept of self-determination. Over a century and a half later, in communities across our nation, that vision remains unrealized. Consider, today, Black entrepreneurs are 3 times more likely to report that they did not apply for a loan for fear of being turned away by a bank, often anecdotally because they heard about that experience from friends and relatives. Today, Black and Latino homeowners are rejected by traditional financial institutions at a higher rate when applying for home loans. And this is the case even when they have credit profiles similar to other applicants. Today, many immigrant business owners, including some Asian American business owners, face language barriers that limit their ability to access capital and banking services. And people who live in rural areas, including many Native Americans, often lack access to traditional financial services of any kind. So President Biden and I know that for our nation to succeed, these disparities must be spoken of, acknowledged, and addressed. One of the last actions, as you heard Secretary Yellen mentioned, I took as a United States Senator was to team up with Leader Chuck Schumer and Senator Mark Warner and Senator Cory Booker and Chairwoman Maxine Waters to invest $12 billion in community lenders, which of course are financial institutions that predominantly do business in overlooked and underserved communities. Last month, I was proud to announce that because of that hard work and the work of many of the leaders in this room, our administration has distributed more than $8 billion of that investment to 162 community lenders across our nation. That is $8 billion on the ground in communities across our nation right now. And I'll share with you some of the examples. In North Dakota, Native American Bank lent $10 million to help fund an opioid addiction treatment facility on tribal lands. In Georgia, Carver Bank lent over $500,000 to help Black-owned companies build affordable housing. And in Mississippi, Hope Credit Union, led of course by the great Bill Bynum, lent $10,000 to a Black-owned and woman-owned coffee company to help them expand. And that's just one example of the incredible work that they do there. Since taking office, then, I will tell you, I have traveled our nation and spoken with small business owners who have received funds from community lenders. And I have seen what it means in terms of acknowledging, recognizing, and then feeding their ambition and aspiration and creativity, both in terms of their own aptitude and capacity, but also because they are in the best position to understand the needs and the capacity of their communities. And I've seen how they use that capital to hire people from the community, to open a new storefront on the main street, how they buy inventory from local businesses. The whole community benefits in one way or another, economically, not to mention psychically, from their presence. And at the same time, I have also seen how the great need for capital still remains in our country, meaning how much more work we still have yet to do. You know, I hope and know that everyone here does get the opportunity to travel our country. And from my travels, I will share with you, there are so many people in our country that have incredible dreams, fueled by their ambition, fueled by their aspiration, fueled by seeing what is possible, and then going for it. But far too many still lack the resources and the support to make those dreams a reality. And what ends up happening then is these entrepreneurs cannot access capital to start a business. We're talking about families who then cannot access the capital they need to buy a home, students who cannot access capital to get an education because they live in an underserved community, and because often they also do not have the benefit of intergenerational wealth. We need to address this because, again, there is a complete disconnect between their inability to grow and the fact that they are so talented and desirous of doing just that. So let's deal with that disconnect, which we also refer to as disparities, because we see that people in our country are having an experience that is not equal. And that's why we talk about equity, because we recognize not everybody starts out on the same base. They don't start out in the same place, even though they have the same God-given capacity. So when we talk about the work we are doing here together, it is recognizing that and being guided by this principle of what we must do in the spirit and in the interest of equity. And to do this, one of the aspects of the success we have seen so far is the benefit and the incredible power of public-private partnership. The public and the private sector joining together. And what we have been doing and must do more is to combine the expertise and the experience of the private sector with the reach and the scale that only the government can provide. And together, that is what we have done so far, which has resulted in the success we have seen. As Secretary Yellen mentioned, earlier this year we launched the Economic Opportunity Coalition. This coalition consists of over 20 private sector organizations. It includes technology companies, philanthropies, and some of the largest consumer banks and investment firms. And together, these private sector leaders have committed tens of billions of dollars to promote and then provide capital to community lenders, to support entrepreneurship and minority-owned businesses, and to expand access to financial services, and to create and protect affordable housing. And today, this coalition has committed more than $1 billion to community banks serving minority and rural communities. So all of our work thus far, we still have more to do, all of our work thus far, I believe, comes down to this. America is a nation driven by the ambition and aspiration of her people. And so let us continue to fight to make sure all people have a chance to realize their dreams and to determine their own future. Because when we do, we not only advance economic justice, we strengthen our economy as a whole, creating prosperity and opportunity for all. Together, we here know we have the ability and the responsibility and the duty, dare I say, to realize the vision of Freedman's Bank. And that is what we have gathered here to do. So thank you all so very much for your vision, for your commitment, and your work. Thank you. Thank you.
Everyone, please take your seats. Our program will continue immediately. Please welcome Treasury Department Counselor for Racial Equity, Janice Bowdler, Kellogg Foundation Vice President and Chief Investment Officer, Carlos Rangel, California Infrastructure and Economic Development Bank Executive Director, Scott Wu, and Black Economic Alliance Executive Director, David Clooney.
Thank you so much. We have the unenviable position of following the Vice President and being the last discussion before lunch. But I promise you it's a really interesting one and something that I've had an opportunity to work with our panelists very closely on. I found myself saying over and over, like, oh, this administration has passed once-in-a-generation investment in the form of the American Rescue Plan. Oh, wait, our second once-in-a-generation investment through CHIPS. I mean 3 with bipartisan infrastructure. Wait, you see where I'm going. Okay, 4 with the Inflation Reduction Act. And so we have these incredible opportunities that we know can translate into real wealth building opportunities for communities of color, for businesses owned by people of color. But these public investments are not enough, particularly when it comes to equity investments. And that's what we're going to talk about today. And in particular, I want to bring to light a set of investments from Treasury through states, the State Small Business Credit Initiative, because this is a really unique opportunity with public funds to connect communities of color and other underserved communities with that high growth equity capital. But how do we do it? We know that the pipelines are not there. We know that this market is not serving communities of color very well. You all know the statistics. I'm sure the folks watching online know the statistics that Black founders are getting 1.2% of venture funding, that Latinx companies are getting 2.1%, and women founders are 2%. And of that 2%, only 1.8% of that went to women of color. And keep in mind, venture capital is just a small slice of the equity capital that's available. Yet we know that these early infusions, particularly for low wealth communities, as we just heard from the Vice President, that are already starting from behind, it's challenging for them to jumpstart their businesses and move to scale without this kind of investment. So here to solve it all today is this amazing panel that I'm really happy to work with. I want to start with David Clooney, CEO of the Black Economic Alliance, and see if you can just help set the context here for us. What do you see as the biggest barriers facing entrepreneurs of color when they're in search of capital, and in particular, that high growth capital that's going to help them scale?
How long do we have? So thank you for having me, and thank you for this administration's unprecedented focus on racial equity with a laser focus on the net benefit to our entire economy of getting this right and closing these gaps. So to put it mildly, and to, I think we have the right backdrop, quite literally and figuratively, of the Freedman's Bank, and thinking about the objective of the Freedman's Bank, but the legacy of systemic racism and the impact that that has had on the reality of our financial system. Previously you had primarily white men making decisions about where capital was going. That hasn't changed all that much. But then even after, in the mid-'70s, the Equal Credit Opportunity Act, instituting credit scores, supposed to do away. You can't make, decisions based on race. All of these traditional factors that impact, credit and worthiness of a company and its ability to grow are still impacted by the systemic or the legacy of racism that has left Black and Latinx communities with, less wealth, without home ownership, without collateral. So, you know, those are that's the easy answer and traditional answer, but I think we also learned some of the mechanical challenges from the Paycheck Protection Program around, you know, not having traditional relationships with banks, not having the capacity of, you know, many employees or accountants and lawyers to fill out really complicated paperwork. So there are kind of macro and micro reasons, but it is very clear that the system is broken. And if we are going to unlock the potential of communities of color, we really have to be very intentional about going to really the mechanical as well as the institutional reasons that communities of color have not been invested in and are still not today.
Right. So let me come to Carlos and to Scott. We often hear this challenge. We have a set of entrepreneurs that are raising their hand. They're ready for capital. They have a hard time connecting with that capital. We maybe don't always hear as much from the challenge that investors have, not just of finding the pipeline, but you face a different set of barriers when trying to match the capital and the products that you have to the needs of the entrepreneur. From the perspective of the Chief Investment Officer and the head of the California Investment and Economic Bank, tell us a little bit about, or I'm sorry, Infrastructure and Economic Bank, sorry about that. Tell us a little bit from your perspective, the challenges that you see investors face, and then we'll get in a little bit into solutions.
Well, thank you for having me here today. So let's start by taking stock on where we are today, right? So as you mentioned, of venture-backed startups, 1% are Black founders and 2% are Latino founders. And part of the reason for that is if you look at the decision makers in the venture capital firms themselves, only 3% of investment partners in the venture industry are Black. 2% are Latino. And a study came out 2 weeks ago, written by my former professor, Josh Lerner, as a co-author, called Racial Diversity in Private Capital. And it took a deep dive into the asset management industry and found that 1.4% of assets in America are controlled by diverse-owned firms and decision makers. And so that's part of the problem, right? And so they also found that the diverse-owned firms and funds have a much harder time raising initial capital, and that investors in their funds have much less tolerance for anything less than strong performance. And so there's a lot behind that. And so why are we here where we are? And part of that is you look at the historical vestiges, and there are a lot of systemic and deliberate racist policies in the finance industry, but today it's very different. It's much more subtle and subconscious with implicit biases, right? And really fixing the prior start lines. And so one of the things that we think about is that we need to change behaviors. It's no longer about just the systems, the laws. We need to change behaviors because it's these inherent behaviors that are causing this. And when you talk to investors in the venture industry, they often talk about trust in their decision-making based on their network of relationships. These networks of relationships are quite closed. They're confined to a handful of elite universities, country clubs, social clubs, dining clubs, boarding schools, and they're insular. At the same time, you always hear venture capitalists talk about making their decisions based on, pattern recognition. And those patterns are established by what might have worked in the past with people that they look to emulate in the future.
Well, it's tough to follow the Vice President, and also when the previous two remarks kind of borrowed on some of the remarks I had prepared in terms of the statistics. Janice, thank you very much to you and Secretary Yellen for the invitation today. It's an honor for me to join you in this panel and to be with all of you, remembering the aspirations of the Freedman Bank and seeing how we can live up to that aspiration today. So if we look at our history, and very fitting with the event today, we have a history of systemic biases that have created inequities that we're trying to solve for today. And I do believe that during the span of our careers, we have an opportunity to make meaningful change to those inequities that have been ingrained into our system. As you mentioned, Scott, on the on that 9 foundation, only 1% of all broadly defined investable assets are managed by diverse owned firms. So the diversity of the decision makers and the decision makers in venture capital with 3%, as you said, that leads to a certain level of decisions. We talked about the low level of funding to venture capital funders. One thing to remember as well is that for every dollar of savings, median savings for a white household, there's only about 10 cents of saving for a Black or Hispanic household, which means that early friends and family investment round for a real estate project or a company doesn't happen. So how do we start providing some supplementary capital at that early ideation stage for early businesses is one of the challenges we're trying to solve for. Another thing is, if you look at vendor spend, if Fortune 500 companies are only 5% of their spend goes to diverse vendors. And if you translate that to human interaction, an example that I have for you, we're meeting in 2019 with one of the top tier venture capital firms. And the example they gave us is they said, we look at our investment funnel, right? So at the top of the funnel is how many ideas are coming in, and then the decision-making process. And their comment to us, and this was based on gender because they had no experience around investments with founders that were diverse by race and ethnicity. And they said, well, we've invested in 2 female-founded companies, but we've looked at our decision-making, and it's not biased. The problem are women. They're just not creating companies. And that was 2019. That conversation has changed from where we were in 2019, thankfully. And I see that level of progression also externally. And part of what we're doing is we've done $31 million in grants to support the ecosystem for nonprofits and small businesses, and as well as investing with diverse managers that have the local expertise to start providing the capital that we can now also act as a bridge. There's that last mile delivery challenge, right? How can we all be bridge makers between the decision makers that are still perhaps functioning under an old system to the new entrepreneurs that are diverse by nature and are looking for that funding?
So one of the reasons why I'm so excited about the State Small Business Credit Initiative is it's one of our few programs that really allows us to invest equity capital into the entrepreneurial ecosystem. And there's this huge opportunity, I think, in doing so to really reshape the way that capital is flowing to entrepreneurs of color. Like, how can we seize this moment where we have public funds going out for equity to kind of remake the way that equity flows to entrepreneurs of color and to other disadvantaged communities? So Scott, I'd like to come back to you. Tell us a little bit more about what you're doing now and how working with SSBCI dollars are going to allow you to change your approach or add something new.
SSBCI is a fantastic opportunity for the state of California to usher in new approaches to decision-making, to allocation of capital. It enables, we can't sit around and wait for the markets to self-correct in an appropriate time frame. That's become quite obvious. And so we have to be explicit and deliberative. We have to use our funds to break open those closed networks to broader representation of Californians. We need to use our funds to really think about creating new patterns for success. I mean, the venture capital industry, right, that's the tip of the scale for innovation in the financial world, and they're largely headquartered in the Bay Area, one of the most progressive areas in the nation, and they haven't been able to figure this out. So we have to help. We have to step in. We've been able to use our SSBCI funds to launch a state venture capital program entirely focused on including more underrepresented venture investors, to support more underrepresented founders and small business owners, and to serve more of the underserved regions of California. And so, but we also have to start by looking inward, right? Because at iBank, a majority of our staff is female or minority. A majority of our executive team is female or minority. We work in our loan guarantee program throughout the state with 7 nonprofit financial development corporations. Their staff is comprised of 73% minorities. And SSBCI has a very strong requirement for something called SETI, right? Socially and economically disadvantaged individually owned businesses. And so for the state of California, you've set a target of 49% of our funds have to be used to support SETI-owned businesses. That's an incredibly ambitious target, but I'll tell you right now that if at the end of the day we don't exceed 75%, I will be extremely disappointed.
I'm happy to hear about this target. That is really exciting. And we know other states are similarly stretching beyond what they've done before, but they need some help. They're creating products, they're connecting with pipelines of diverse entrepreneurs. And Carlos, I'd love for you to talk a little bit about the announcement that was made this morning, partnership between you and the JP Morgan Chase Foundation, or the Kellogg Foundation, and the JP Morgan Chase Foundation to create the Fund for Inclusive Entrepreneurship. Can you tell us a little bit about that and how it's going to work with SSBCI and programs like what we're hearing in California?
Absolutely. So we're thrilled to be part of this initiative. We do think it's a historic, once-in-a-generation opportunity to drive change and impact to the communities that we serve. We think that the fund will have the opportunity to leverage over $10 billion of federal funding into community. And we have decades of work trying to integrate disadvantaged communities into the economic system so the U.S. economy works for all. And at this moment, we believe that, right, as an investment team, we've traveled. I used to travel 200,000 miles a year, 8 times around the globe, looking for opportunities, with several people on my team doing the same. This is the moment to unleash that type of potential inside our own domestic markets. We have that opportunity at the moment, and think that private resources will absolutely follow federal dollars here because the opportunity is enormous.
So David, I want to come back to you because hopefully what we're doing here is setting the table with really excellent opportunities to redesign the flow of capital, prime it up for entrepreneurs of color, but we need to make sure that we've got the pipelines and the entrepreneurs both are ready and know how to connect to that capital. Can you talk to us a little bit about what BEA is doing in this regard?
Absolutely. So let me first break a bit of a myth, which is that there just is no pipeline. And we hear this so frequently that there just aren't enough investable, ready to scale businesses from communities of color that we can invest in. We have all this capital ready, if only they were there. As
we heard from Carlos, we just can't find enough women, right? We know
exactly.
We know that this is not the case.
We hear the same. And the sprinkling of fact there, most of that is fiction, is that it is true that businesses of color, particularly black businesses, for example, over 95% of black businesses are sole proprietorships, and they have trouble scaling because of a lack of access to capital and because of a lack of access to friends and family money, because of a lack of generational wealth, and because we are, as the Vice President talked about, denied for loans at a significantly, disproportionately higher rate. But with all that aside, there are absolutely businesses that are ready to invest in and scale. And this is something we heard at the Black Economic Alliance during the pandemic, days after George Floyd, not coincidentally, where folks would reach out to us from the alternative investment community and say, we want to invest in more black entrepreneurs, we just can't find them, please help us, and we can't create them out of thin air. We say, they're there. You need better proximity. You need to get out of the Bay Area and get off of the West Coast. But also, you absolutely can create them out of thin air. You create companies out of thin air all the time. You invest in them, you incubate them, you give them the resources they need to grow. So, some examples of programs that we have stood up that are, examples of things that particularly the private sector can be doing are the Center for Black Entrepreneurship that Black Economic Alliance started in partnership with Spelman and Morehouse colleges, and we've recently brought in Clark Atlanta University to go to a target-rich environment of HBCUs, particularly in Atlanta, the second largest collection of black folks in America, one of the hubs of black business in America, and create an ecosystem of exposure, opportunity, and ultimately investment in black entrepreneurs in a way that is meant to create a multiplier effect of investment in other black communities and black businesses. And then the BEA Entrepreneurs Fund, as well as a $50 million venture capital fund we've stood up to not only provide the seed and startup capital that businesses need, but particularly the support they need to grow. And that's both capital, but also the post-investment support, mentorship, and entrepreneurship kind of examples that they need. And I'd give an example of, one of our board members, Rich Lou Dennis, the founder of Shea Moisture, in the deal that he brokered with Unilever to acquire Shea Moisture, part of it was creating the New Voices Fund, a $100 million fund to invest in particularly black women entrepreneurs. And through that fund, just in the last 2 years, they've created over 30 black millionaires. And you think about, the multiplier effect of those entrepreneurs then investing in other black businesses, then mentoring other black businesses and reinvesting in their community. That is what we're trying to unlock, and there's absolutely so much potential there if we, help companies get out of their own way and investors get out of their own way and invest in black and brown companies.
And so can you, I'm going to have you pick at this a little bit more. Not only do we have two really important colleagues on stage, but we have a room full of folks that are investors or have the resources to help us think about the driving investment capital to black and brown owned businesses. What do you need from investors? And one of the things that I'm thinking about that I'd love to hear you comment on is the experience with these funds. One of the things that I often hear about is like we tend to default to venture. Venture is a very specific kind of equity when really what our community needs are different kinds of equity, can be market rate. It's sort of like the assumption that if you're not venture, then you're talking about concessionary. We're not talking about concessionary, but there's a wide range of ways to invest in businesses that are really going to set them up for success. Can you just say a little bit more about that experience and maybe what you need from investors?
Absolutely. So let me be very clear. The first and foremost thing we need is capital. And our fund was launched with an anchor investment of $20 million from Wells Fargo that was transformational and really sparked other investment from others. So that is the starting place. But you also need, I talked about post-investment support. That is creating an ecosystem of support and exposure, but also technical assistance to investors so that they're getting the resources they need, that they're not reinventing the wheel. So a lot of the, what is needed for particularly first-time entrepreneurs and founders is examples of how people have done this before, is access to, John Rogers talked about this at our breakfast this morning, which was, even better than capital is access to customers and access to a sustainable flow of income that will, help a business scale, grow, and be sustainable over time. So it is that entire ecosystem of support and opportunity and capital, not only the initial investment, but also the kind of post-investment technical assistance, introducing folks to your network, and then creating sustainable opportunities for business growth.
So Scott and Carlos, I want to come back to you in the few moments that we have left, and reflecting on some of what you've heard from David, the kind of innovation that you expect to see amongst investors based on the work that you're doing, and maybe answers some of what David is calling for in the market.
Well, there needs to be innovation all around. We need to better apply technology to originate and reach the customer, to provide language support and technical assistance. We need to better use securitization to draw more capital into the marketplace for these products. And we need to leverage potentially artificial intelligence to help reduce the biases in underwriting and investment decisions. And so, but we need to do this all together. It's not just the industry. The financial markets are actually quite dynamic and ever evolving. They react very quickly to everyday information and new insights. And so we need to evolve with them. We can't, as a public entity, just think we could take a couple of years to draft up very rigid rules and then sit on them for the next 10 years and for it to be applicable to the marketplace. We need to be adaptable. We need to evolve with what's happening on the ground. And fortunately, SSBCI enables that for us. And so let me give you a quick example. In March of 2020, when COVID lockdowns started, furiously, we sat down and within days, on April 2nd, we launched a COVID microloan guarantee program targeting the smallest of small businesses, those that have an average of under 5 employees, for loans under $50,000 on average. And we've served several thousand of those entities in the height of that pandemic because we were able to draw in private sector investors who were willing to go outside their comfort zone. We had to go outside our comfort zone, do something new and innovative. They had to as well, and they met us and provided those thousands of loans. And we reached 86% female-owned, minority-owned, and businesses in low to moderate income tracks. And so that led to, a couple months later, we realized, well, those CDFIs didn't have enough access to capital. And so I worked closely with my California colleagues at the time, who are now Secretary Yellen, Deputy Assistant Secretary Morse, Administrator Guzman, and also Laura Tyson. We all sat down and strategized about how we could coalesce a public-private partnership to bring all the entities we needed involved to address and tackle the scale of that problem. And that became something called the California Rebuilding Fund. And so it brought in corporations and banks, it brought in philanthropists and public sector entities and municipalities to draw in more capital. And so those are the type of innovations that you have to be prepared to move on and act quickly.
So I see an opportunity here on capacity building. Treasury announced that they're committing $300 million to do capacity building to make the most of SSBCI. And also that opportunity to provide equity capital, I think, is huge. That's the scarcest of capital. It should have enormous returns both socially and economically. 3 quick examples of where we see innovation. And the general themes will be around partnerships between public, nonprofit, and corporate. So that gives you a lot more dollars around a single idea, and then different structures of capital, like Scott said, around securitization. So JP Morgan started a new share class on their money market called Empower. So you're facing JP Morgan Chase. They have the capacity to absorb very large amounts of capital. So we're sitting usually in $150 million of cash. Now, if we were to give that to JP Morgan, that actually gets dispersed to select MDIs that we pre-select through the program. It doesn't create the regulatory burden of deposits, but it does provide operating budget to MDIs. We think that's very helpful to those organizations. The second one, and we're very focused on the transmission mechanism. I mean, there's a deluge of dollars coming in. The transmission mechanisms that we have in our system today, the plumbing, if I may be so crass, wasn't designed for this amount of money. So there'll be some pain points in there that I think private sector could be really helpful, and nonprofits as well. Second project, there's a group called Navajo Power. They do utility scale solar projects. So we ended up working in New Mexico in a project with them. It involved grant capital, program-related investments, as well as commercial investments through a securitization. That funded a solar project that had a commercial partner with a local utility. So you have nonprofit dollars, and then you have tribal communities working together to have a very large-scale project with a commercial player providing cash as well as providing expertise. And part of those proceeds will go back to help local tribal communities. And finally, we're investors in a fund called SOAR, which is the Southern Opportunity and Resilience Fund, and that's doing a lot of work backing CDFIs to amplify their ability to lend, right? So they have the capacity and the proximity. We're just helping amplify that capital through a structure that's regulatory friendly for CDFIs.
So you mentioned the technical assistance, and I want to quickly give our colleagues at the Department of Commerce a shout out because they are leading out $100 million of the commitment to technical assistance, and they're going to be great partners, I think, on this equity piece in particular. So we're at time. I'm going to ask us to wrap with 15 seconds each. One thing that you can ask this crowd for, how can they help you, or what can they be doing in their work to advance supporting entrepreneurs of color, other diverse entrepreneurs, getting access to high growth equity capital?
I'll go first and say, get outside of your comfort zone. Talk to people you haven't worked with before. Work with organizations you haven't worked with before. This is a target-rich environment, as I like to say, in this room. So, you know, as we talked about behavior change. We need to be going to different places to drive better results.
I would just say, come join us. I mean, there's the room on this boat for all of us because we need to work together. SSBCI is very well designed in that it requires a high level of private sector leverage. You know, I'll just point very quickly to SSBCI 1.0. We applied $84 million to our loan guarantee program. Since 2013, it's now supported $1.8 billion of loans. And so, you know, we led the nation in the number of jobs created under SSBCI 1.0. We were able to apply 62% of the financings to diverse-owned businesses. And this time around with 2.0, with $1.2 billion, we have plans to put out $18 billion of private capital. And we need your partnership in order to do that. Your technical assistance, your marketing, and just your resolve. Thank you.
I'll quote the poet Pitbull. And in his often repetitive songs, he says, let's take this moment and turn it into a movement. We have a once-in-a-lifetime opportunity to really bend the arc of history. So it's the era of impact innovation. Give us a call. We want to partner. There's a lot of topics where we can make the difference together.
That's a really excellent call to action. And the next thing that this crowd is going to do together is divide up into a series of small group conversations where we can take many of the things that we've heard about on this stage and break them down and figure out how do we translate them into action steps. And really, how do we commit to each other and to partners not in the room? How are we going to move all of this work forward? So I want to thank my esteemed panelists. I want to thank all of you that have joined us in the room, stayed flexible with us throughout this schedule. More to come. Thank you so much.